Is 2025 the year home ownership finally gets easier? You've seen the headlines: $15,000 grants, PMI gone, SALT raise. But what's hype and what's real? I'm breaking it all down so you know exactly how this affects you. All right, let's talk about the one big beautiful bill that just got signed into law on July 4th, 2025. If you've heard rumors like $15,000 grants or free homes for first time buyers, pump the brakes. While the law doesn't include federally backed down payment grants or homebuyer credits, there are meaningful tax changes and housing credit adjustments that can better serve you. I'm Pauline Lee, a licensed mortgage broker and real estate agent right here in Worcester County, Massachusetts. And today, I'm going to walk you through the real confirmed facts in the new bill, what it actually changes, what it doesn't, and what you need to do now if you're thinking about buying in 2025 or early 2026. For a no obligation consultation, connect with me through the link provided. I encourage you to get pre-approved. So what's actually in this bill? Here are the confirmed housing related parts. PMI and mortgage insurance deductions are now permanent. This is huge. If you put less than 20% down, you're paying FHA mortgage insurance or private mortgage insurance, PMI. You can now deduct it on your taxes permanently. That used to expire and get renewed last minute every year. Now it's locked in. Let's break it down by how it impacts the average buyer. If you're buying with less than 20% down, PMI is often $100 to $250 a month, depending on your loan size. Deducting that from your taxable income could mean $1,200 to $3,000 a year in tax savings, depending on your bracket. Now that's real money that makes owning a home more affordable year after year. If you're putting less than 20% down, this change could save you thousands. I can help you calculate how much. Just book a quick session with me through the link below. No change to the $750,000 mortgage interest cap. High-cost homes are still eligible for the mortgage interest deduction up to $750,000 of acquisition debt. Same as before. This is good news. No surprises, no removed benefit. How does this impact you? Well, there's no expansion in the credit, but also no shrinkage. You can continue to plan around this known limit when purchasing or refinancing. Very beneficial in high-cost markets. SALT deduction cap raised. For homeowners in high-tax states like Massachusetts, New York, New Jersey, or California, the state and local taxes, SALT, deduction cap is up from $10,000 to $40,000 through 2029, with a phase down starting for incomes over $500,000. That means you can deduct way more of your property taxes and state income taxes. How does this impact you? If you're buying in a high-tax area like Massachusetts, New York, New Jersey, or California, you might get larger deductions, making home ownership more attractive for upper middle income borrowers. Say you pay $12,000 a year in property taxes and $5,000 in state income taxes. Under the old cap, you can only deduct $10,000. Now, with a $40,000 cap, you can deduct the full $17,000, which could reduce your taxable income by thousands more. And if you're a repeat buyer or real estate investor, this bill helps you too, especially if you're holding multiple properties. Lower taxes equals better cash flow, especially in higher cost states. If you're in a high tax state, this is a big win. Let's look at what this means for your specific situation. Grab a time on my calendar below. Major expansions to the low-income housing tax credit. The Low-Income Housing Tax Credit Program was created under the Tax Reform Act of 1986 to encourage private investment in the development of affordable rental housing. While this law doesn't directly help buyers, more affordable rental housing supports housing stability, which should ease rental costs and may ease competition and pricing for entry-level homebuyers. In addition, the low-income housing tax credit projects often revive neighborhoods, not only with more affordable rental supply, but also provide jobs and local economic growth, and help cities to achieve housing equity with long-term planning. Now, let's talk about what didn't make it into the bill. No federal credits, no grant money. Those were rumored, but none made it into the final version. So don't count on federal help to cover your down payment. You can still turn to state or local assistance programs or employer-funded help. Connect with me to discuss what down payment assistance options you might qualify for. Even though the federal grant didn't make it in, there are still great state and local programs we can explore together. Who benefits most? This law mostly helps middle-income buyers who put less than 20% down, live in high-tax states or counties, and itemize deductions on their tax returns. If that's you, you're getting real, measurable savings on housing costs. But if you're low income, cash-strapped, or looking for down payment help, we'll need to get creative. Either way, connect with me. Check out the link provided to schedule a free consultation. Not sure if this applies to you? Let's figure it out together. Book a 15-minute buyer readiness call, and I'll walk you through it. Here's what I recommend if you're thinking of buying this year or next. Get pre-approved now. Rates are still bouncing, prices have been shifting, but having a mortgage strategy in place now gives you flexibility when prices or rates shift in your favor and when you decide the timing is ideal. Check for local assistance programs. Even if the federal bill didn't add grants, most states still offer 3 to 5% down payment assistance, and we can even look at lender credits. Talk to your tax professional. If you're paying PMI or high property taxes, plan ahead with your CPA to make the most of these deductions. Schedule a free buyer prep call with me. If you want help figuring out your buying power, what deductions you might qualify for, and whether buying this year makes sense, book a call below. Let's talk through your numbers. The One Big Beautiful Bill may not hand you the keys, but it gives you powerful tools if you know how to use them. If you're wondering whether this is your time to buy, let's figure it out together. Hit like, subscribe, and check out the links below for your free buyer guide or a one-on-one chat. Thanks for watching, and remember, home ownership isn't just a dream, it's a plan. I'm Pauline Lee, a licensed mortgage loan officer and real estate agent. Connect with me for a free consultation. I encourage you to get pre-approved.